In 11 days, one anonymous wallet turned $321 into $2.18 million. No fund, no analysts, no Bloomberg terminal, just a phone. By the end of this video, you'll know exactly how that stranger did it, and how you'd spot the next one before the timeline does. Because the wallets knew before the timeline did. They always do. Now, while that stranger was getting rich in the open, Wall Street was quietly buying $1.35 billion of the exact same blockchain. Two worlds, one chain, and only one of them saw it coming. This is the story of a civil war happening right now, on the fastest market on Earth, and almost nobody is calling it what it is. On one side, the degens, anonymous traders, bedrooms, phones, no permission required. On the other, the suits, the institutions who, for 100 years, owned every edge that mattered. And here's the bold part, the part I'll spend this whole video proving to you. The degens didn't beat Wall Street by being smarter. They beat it by playing a game. Wall Street wasn't allowed to enter. This isn't a story about getting rich. It's a story about a 100-year-old wall finally cracking, and the handful of people who walked through the gap before anyone else noticed it was there. Stick with me, because the lesson at the end is the part that actually changes how you trade. Who's winning, what each side sees that the other doesn't, and why it all plays out in real time. That's where we're going. To understand the war, you have to go back to the moment the doors blew open. January 2025. On Solana, more than 70,000 new memecoins were launching every single day. Not a typo. 70,000. A day. The chain surged 20% that month and left Bitcoin in the dust. Now, if you came from the old world, the world of quarterly earnings and circuit breakers, this looked like chaos, insanity, a casino with the lights ripped off. But to the people inside it, it was the most level playing field finance had ever produced. Think about what just happened there. For a century, the rule was simple. To play the game, you needed access. A seat, a license, a relationship with the people who held the checkbooks. And then a website let anyone, anywhere, launch a tradable asset in seconds, and anyone else buy it the instant it appeared. The gatekeepers didn't get a vote. There was no gate. One platform sat at the center of it all, Pump.Fun. It would go on to become Solana's first $1 billion revenue app, its daily users climbing from 60,000 to 260,000. An entire economy, built by people the old system never let in. And the mechanic underneath it was almost insultingly simple. Anyone could spin up a coin in under a minute. No code, no company, no lawyer. You picked a name, picked a picture, and the platform did the rest. It created the token, opened a market, and let the world start buying instantly. If enough people bought, the coin graduated. It crossed a threshold and got a real, liquid market of its own. That was the dream every launch was chasing. Graduation, escape velocity. Now sit with the scale of that for a second. 70,000 of these, a day. More new markets opening every hour than the New York Stock Exchange has listed companies in its entire 200-year history. The old world measured opportunity in quarters. The trenches measured it in seconds. But, and this is the part nobody screenshots, that same machine was brutal. Because here's the number that defines the trenches. 98.5% of the tokens launched on that platform never made it. They went to zero. An academic study tracked it. Out of every 1,000 coins, roughly 15 survived. The rest were dust. So picture the battlefield now. A market where anyone can play, and where 98 times out of 100, you lose. To Wall Street, that was proof the whole thing was a joke. To a small group of traders, it was the greatest opportunity of their lives. Because in a market where that almost everything dies, the few who learn to read which ones live don't just win. They win amounts that don't make sense. And that's where our two strangers come in. Let's go back to that wallet, the one that turned $321 into $2.18 million. On-chain, you can see exactly what they did, and it's not what you'd expect. No single hero bet. The wallet, labeled 8BGAZ, accumulated 45 million tokens through a long series of tiny swaps, often just a few dollars at a time. Patient, quiet, methodical. Everyone saw the same chart. Almost no one saw the same thing. Then there's the other one, a trader known as BXNU5A, who put $180,000 into a coin called Pippin and rode it to 3.6 million, a 20x, in under 2 months. While most of the market was bleeding out, Pippin ran over 1,000%. And these weren't isolated flukes. The same season, another wallet caught Pippin early, and 8BGIMZ caught its coin early, and across the chain a pattern kept repeating. Small entries, early, into the right names, held with a discipline most people simply don't have. The ones who blew up didn't ape the most. They read the best. Now, I have to stop and say this clearly, because it matters. For every 8BGIMZ, there are thousands of wallets that went to zero. This is not a get-rich-quick story. Meme coins are some of the riskiest assets on the planet. Remember that 98.5%. Nothing here is financial advice. If you ever play this game, never put in more than you can afford to lose. Completely. Most people who touch this market lose. That's not fear-mongering, that's the math. But here's what the winners had in common. It wasn't luck, and it wasn't magic. It was a pattern. They were reading the chain. They were watching wallets, watching launches, watching the flow of money in real time, while everyone else was watching the price after it already moved. So let's actually teach the read, because this is the whole game. When a new coin appears, the loser asks one question. Is it going up? The winner asks 4. 1. Who's holding it? If 10 wallets own 90% of the supply, that's not a community. That's a trap waiting to spring. The winners want the holders spread out. 2. What's the developer doing? If the person who made the coin is quietly holding a huge slice, they can dump it on your head the second you buy. 3. How many snipers got in at the very first block? A swarm of bots in the first second means you're already the exit, not the entry. And 4, the one most people never check. Is the smart money here? Are the wallets that won the last 10 coins showing up in this one? None of that is on the price chart. All of it is on-chain, public, sitting there for anyone who knows where to look. That's the edge, not a secret, a habit. And that raises the obvious question. How do you actually watch a market where 70,000 things launch a day? You can't refresh 1,000 browser tabs. The degens who win don't. They use a terminal built for exactly this. A live feed of every launch the instant it goes live, with the on-chain signals layered right on top. The one most of the trenches settled on is called Axiom. Its launch feed, they call it Pulse, is where this entire war plays out in real time. Every new coin, the moment it's born, who's buying, how concentrated the holders are, where the smart money is moving. It's the closest thing the degens have to the screen Wall Street spent billions building, except anyone can open it. I'll put my link in the description if you want to see the feed I'm talking about. Now, back to the war. Because while the degens were getting rich in the open, the suits were watching. And they were not amused, they were taking notes. Because somewhere on the other side of this chain, the smartest money in traditional finance had quietly started doing something nobody expected. Here's the twist nobody on the degen side wanted to admit. By the time the meme coin frenzy peaked, the smart money was already gone, and moving somewhere else on the very same chain. Galaxy Digital, a serious institutional name, bought $1.35 billion of Sol in a single week. Not a meme coin, the chain itself. And then the doors really blew open. Solana, the so-called meme coin casino, quietly started listing 200-plus tokenized stocks, real Wall Street assets, on the same rails as the dog coins. Think about how strange that is. The same blockchain where a stranger flipped $300 into millions is now where you can buy a tokenized share of an actual company. The casino and the stock exchange, running on the identical infrastructure. The suits spent a decade calling crypto a joke. Then they showed up and started building on the punchline. And here's the quiet irony. The thing that made Solana attractive to Wall Street, the speed, the liquidity, the round-the-clock markets, was battle-tested by the degens. The meme coin frenzy was the stress test. Every one of those 70,000 a day launches was accidentally proof that the rails could take the load. So who actually won the Civil War? Here's the uncomfortable answer. Both sides, and neither. The degens proved the playing field could be level. They built an economy worth billions. At the peak, memecoins were nearly 30% of all trading activity on Solana. And the moment they proved the chain worked, Wall Street walked through the door they'd kicked open and started building on top of them. That's the pattern under the pattern. The trenches are where the edge is discovered. The institutions are where it gets absorbed. By the time it trended, the smart money was already gone. Which means the only real way to stay ahead isn't to be smarter than Wall Street. It's to be earlier. To be reading the chain while they're still reading the news. So what do you actually take from a war with no clean winner? 3 things. 1. The edge on Solana was never about being a genius. It was about access. And for the first time in history, that access is open to anyone with a phone and the discipline to use it. The gate is gone. That's not hype. That's just the new shape of the board. The kid in the bedroom and the analyst in the tower now see the exact same chain at the exact same moment. The only difference left is who looks closer. 2. In a market where 98.5% of everything dies, survival is the whole skill. The winners weren't gamblers, they were readers. Of wallets, of flow, of who was buying before the crowd. The chart doesn't lie, the people reading it do. 3. And this is the one that lasts. Every cycle, the smart money moves first and explains itself later. Your job isn't to chase the story, it's to watch the place the story starts. On Solana, that place is the launch feed, the raw flow, before it becomes a headline. Master that and you stop being the exit. You start being early. The doors are open, the edge is real, and it's sitting on chain, in plain sight, for anyone disciplined enough to look. The signal was always there. Now you know where to look. If this is the kind of breakdown you want more of, the real story behind the trades that made and broke fortunes, subscribe, and I'll see you in the next one.